morning. Welcome to CATEX TV. My name is Frank Fortunato. Today is Thursday, September 20th, 2012, the last full day of a very hot summer in the Northern Hemisphere. It looks as if Solvency II, the big regulatory scheme coming from the EU to better oversee financial institutions, including insurers and reinsurers, is going to be delayed yet again. After hundreds of millions of dollars being spent by insurers and banks to prepare themselves for the change, it looks as if the European Council, which is meeting this week to discuss the final implementation steps, are going to push it back from 2014 to 2015 now. It just keeps getting more confusing insofar as who's going to have to adhere to what and when. An interesting story appeared today, just minutes ago. A Syrian state-run TV station said that a military helicopter crashed near Damascus in a suburb. That alone would not be too noteworthy. However, we read on. The helicopter clipped the tail of a passenger jet with 200 people aboard. The passenger jet did safely land. The helicopter did not. That prompted us to begin to think, who was still flying into the Damascus airport? A passenger jet with 200 people on board flying into a war zone where there seems to be nothing but artillery firing, hand-to-hand combat, automatic weapons, and mortar shelling led us to look at the Syrian International Airport website in Damascus, and we found out that Royal Jordanian Air, Air Arabia, Kuwait Airways, Egypt Air, Ethiopian Airlines, Emirates Airline, and Air Algeria are still flying in and out of Damascus. My goodness. India today is seeing 50 million people participate in a general strike that is shutting down some Indian states completely. This is in response to a 14% rate increase in diesel fuel that's been imposed by the government. It's part of a package of big bang economic reforms aimed at boosting India's sharply slowing economy. Bangalore, India's IT and outsourcing hub, was hard hit by the strike, but Mumbai, the country's financial capital, had banks and offices open as usual. Last month there was a terrible fire in Karachi at a clothing factory. The New York Times is reporting today that the factory, Ali Enterprises, that had 300 of its workers killed in the fire, had just been given a clean bill of health by an international inspection agency that had looked at the factory to determine whether the safety conditions were in place that would allow it to be given a seal of approval for Western companies to continue using it. In August, 2 inspectors visited the factory. They gave it a prestigious SA 8000 certification, meaning that it had met international standards in 9 areas, including health and safety, minimum wages, child labor, etc., etc. The 2 inspectors were working on behalf of Social Accountability International, a nonprofit in New York that obtains much of its financing from corporations. Weeks later, on September 12th, the factory engulfed itself in fire with over 300 people killed. One individual from the Workers' Rights Consortium, a monitoring group based in the United States, said the whole system is flawed. This demonstrates more clearly than ever that corporate funding inspection mechanisms cannot protect workers. No kidding. Here's an interesting story. Yesterday, the U.S. Department of Justice demanded that a, quote, remorseless Taiwanese company pay $1 billion in fines and that its 2 top executives each serve 10 years in federal prison. This is in their role as central figures in what prosecutors are calling the most serious price-fixing cartel ever prosecuted in the United States. The Justice Department lawyers made the demands yesterday in open court. The company involved is AU Optronics. They produced LCD screens used in TVs, computers, and other electronic products. Billions and billions of dollars, according to the Justice Department, were spent in excess of what should have been spent by American consumers. And we have an interesting story coming from a marine insurance conference in San Diego. Marine insurers, of course, pay for the hull and liability coverage for ships that ply the oceans. They're also very interested in salvage equipment, as one might expect. If you can rescue a ship and perhaps repair it, you might have to pay less. The industry apparently indicates that They're pretty good at repairing and rescuing big passenger ships and cruise ships, but insofar as container ships and tankers and the like, the technology is lagging way behind. If there's a mid-ocean difficulty with a container ship or a tanker, oftentimes the industry simply has to absorb the loss and pay it because they don't have the equipment available, either they or salvage companies, to go ahead and rescue the ship and bring it in and repair it. Yesterday, the marine reinsurers said that they have to take the bull by the horns, and they have to, in fact, invest in this new salvage technology themselves, and they should, in fact, consider pre-positioning new salvage equipment around the world so they can go out and rescue the ships so they have an attempt to repair them rather than pay the total loss. An interesting indication of how the industry is addressing a problem. In May, we reported the crash of a Russian superjet, so to speak. It's called the Sukhoi Superjet 100. It was in Indonesia. It was a medium-range plane meant to compete with the Boeing 737. It had been on an international trade mission around the world, showing off its wares to countries in the hope that they would buy the plane. This is what happened. Yesterday, the Russian authorities and the Indonesian authorities signed an agreement indicating that the findings relating to the crash was as followed. The pilots did not react to the terrain and traffic collision avoidance systems warning. The document says that the aircraft systems and units were in full working order, including the terrain warning awareness system, which issued a bleeding terrain hazard warning. On May 9th, the Sukhoi Superjet 100 was making a demo flight in Indonesia, which was planning to buy the plane. Trying to show off the plane at its best, the pilot, who was actually quite experienced, took it to a dangerously low altitude, and instead of turning back as planned, began to circle around. The pilot was flying the plane well, but he made a fatal mistake. He turned south, aiming directly into the mountains, instead of north toward the airport. He ignored the bleeding calls of the terrain advance warning system. He believed he was flying over a flat plain. The plane then, of course, proceeded into a mountainside directly in front of the pilot, crashing, killing everybody on board, including local and Russian officials. Well, very interesting. Hopefully, if you're listening to this, you didn't have a piece of that plane on your insurance coverage. That's the news for today. If we have any breaking news, we'll come back and tell you. Thank you for watching, and we'll